Okay, what I want to talk about here is price cycles and why they are the key to trading the S&P E-mini futures. What you see on the screen here are the processtrading.com indicators, and I'll explain those as we go along because they are the foundation to understanding the price cycles. So first, let's just start out very simply by what is a cycle? Well, a cycle is just a complete or a repeating occurrence. Now, if you had something such as an oscilloscope, which is a scope for an oscillator, so it's a oscilloscope, you have seen like waves and patterns that go like this, and those represent wave cycles. And they measure the amplitude and the distance between them. Now, let me get rid of that. If you've seen a sine wave, which also measures different cycles, it's two lines that go basically like this. They intersect. And I know this is kind of crude, but I'm just trying to get you the idea of what a cycle is. So a sine wave has two actually lines that cross and intersect that represent the cycle. So let's break those down and just understand what one cycle would be. So here we have a line, and a cycle would be like that. If you were to move these, superimpose them on top of each other, it would make a circle. It would make one complete cycle. And here is the cycle going down and going up. So let's relate this cycle to price. Let me get rid of this. Now, in a lot of technical terminology for technical analysis, when they talk about cycles, they'll talk about an accumulation phase and then a distribution phase, and they'll call that a cycle. Of course, the trouble with that is the accumulation phase is when its price is going up. Well, you don't know if this is the end of the accumulation phase. You don't even really know if this is the beginning of the accumulation phase. You don't know if this is the end of the distribution phase or where the beginning or the end of that is. So that's the trouble with just the general terminology. So in fact, we don't even have to know that definitive type of terminology. All we have to know is that the old axiom for trading in itself, what do traders do? Or what does the market want to do? Or what do the professionals want to do? Well, they buy low and sell high. So that's what we want to do. We want to buy low, sell high, buy low. Well, again, let me put that cycle on here. So if you come down here and you buy at the low and then you sell at the high, if you buy at the low and sell at the high, that's a cycle. That's a trading cycle. So now what we have to know is when do those cycles begin and end, and what do they look like? Well, that's where our processtrading.com indicators are going to help us. Now, these are custom non-correlating leading indicators. And when we think of a cycle, a cycle then can revolve around, this is the support and resistance line. It's also the VWAP line. It also is a trend trading mechanism, and it's also a regression to the mean line. So this line serves many purposes right here in the process trading right edge system. But you can see that price kind of oscillates around support and resistance. In other words, it cycles around support and resistance. And we know that to be a truism for trading because of just our general trading experience. So that a cycle then can cycle around support and resistance. It can cycle from a regression to the mean. Now, this line here and this line here are the contrabands to processtrading.com, and those are where you can take contrarian trades, but they also represent a position from which price will regress back to the mean. And you can see it here. It comes down to close to the contrarian band here, or the contraband, and it regresses back to the mean. It comes down to the contraband, and it regresses back to the mean. Then the one thing that I don't have shown in this graph right here is a trend. But when, let me see if I could kind of draw one here. If you had an uptrend like here, this could be represented by the VWAP potentially, and then you would have price cycling around the uptrend. So you can have price cycling around support and resistance, around regression to the mean, or you can have it cycling during an uptrend or a downtrend. Just an uptrend, you're making higher highs and higher lows. And the reverse is true on a downtrend. So let me get rid of those. So each one of these indicators will help us determine what a cycle looks like, because not all cycles begin and end in the same place. They're not all the same length. Like, for instance, let me put this back on here again. Here's one. Oops, that's supposed to be straight, whatever. So here's a cycle, and then there's a cycle. So you have a long cycle, you can have a short cycle. When you're in an uptrend, it could be for a long period or short period. So you have to know when those price cycles are occurring and exactly what they look like. Well, again, that's where our indicators come in and tell us. They tell us not only what they look like, but when it's occurring. Primarily, the way they do it is by these blue price bars here. These are the processtrading.com price cycle bars. And we're going to explain them in a minute because they tell you something that is almost the opposite of what you have been educated in your training or in your trading to expect. But remember, the cycles are always going to be buy low, sell high, buy low. So that is what we're looking for, no matter whether that's an extended cycle or a compressed cycle. So let's go over that really quick here. Now here we see the blue price cycle bars coming down, and it doesn't really matter who's making that happen. We don't care who's making it happen. Really what we care about is what is occurring and when it's occurring. The who just doesn't matter to us. They can call it smart money, they can call it professionals, they can call it high frequency trade, they can call it whatever they want. We don't really care. All we care about is that we can identify what is occurring and when it's occurring. So the way that we do that is we have a stop exit line right here. That's this dashed red and green line here. And I'm not particularly going to go into all the application of that indicator. That's part of the indicators. But I do want to mention that we see right here a price cycle bar going below the stop exit line, where the price up here was above the support and resistance. It was above this VWAP, and it was green. Then price dropped below the support and resistance, and then a price cycle bar came in below the stop exit line. And that's a clear indication that at that point, the price is going to start in a downward part of the cycle. In other words, if we wanted to put this in our common terminology, and we'll show it over the course of this video a couple of times here, this would be where they're selling high. Now, this could be over here as well, but we didn't know that until we saw the indication of the price cycle bar. And so they're selling high. So now all we have to know is, we know where the high point is in the cycle. Now we have to know, well, where is the low point in the cycle? And this is where they don't actually kind of tell you really what's happening. When price is going down here, and we see the blue bars continue to descend down there below support and below the stop exit line, and they're continuing to go down until they get down to this point, which is very close to the contrarian line here. And when we see that, then we are looking to see, when are these blue bars going to stop? When are they going to come to a conclusion? Because that will be the end of that part of the cycle. But because of the positioning of this price cycle bar here being so close to the contraband, we are now more inclined to interpret that as an ending price cycle bar. And not only that, and here is part of the key, this does not represent selling now. This represented selling. This is selling. This is selling. These are all selling. This is the selling taking place in the downward part of the cycle. Right here, the cycle is coming to a conclusion. This is the climax of the cycle. This is climax buying. And how does that fit into our cycle? Because it's buying at the low. The low is now down where the contrarian band and a contrarian trade would take you back up, and price would start regressing back up towards the mean, which you can see exactly what it does. This represents buying. When you get over to here, this is even a more classical situation with the price bars. You can see that they're coming down, and you can see how short that cycle was. But here you have the price cycle bars, and this represents buying. This is climax buying from this little cycle here. This is climax buying. Then it goes up to the top, and they always want to tell you that, oh, you're going to have to flush the traders out, and you're going to have big volume spikes, and that's going to represent exhaustion and that type of thing. Well, really what's happening is when it gets down to this place, down to the points of the lows of the cycle, that's where the price cycle bars represent buying at the low. And this is where, and this is the configuration you want to look for, so you can see that it's not, this wasn't classical, this is more classical of that configuration, and you have the opposite over here. This is where this represents selling. This is climax buying, this is climax selling. So they took price all the way up here, and now they're selling it. And that's what kicks off the cycle to go down. And this is what kicks off the cycle to go up. So you can see that here. Here you have your climax selling off right here at the top of the cycle. And here you have a price cycle bar below the stop exit line there, below support, and it's going down. And here you have another one. And this is where you want to know about the cycles, because now we have, you can't see it here, it's just an outline really, but this is a blue bar above the price cycle, above the stop exit line, but it doesn't represent the end of a cycle. So now let's talk a little bit about where the end of the cycle is. Clearly the end of the cycle came down here, and here is the blue price cycle bar above the stop exit line, just as it was over here. But this is where the up part of the cycle kicks off, and it goes up to here. So now let's explain some of these cycles and how we can tell where they're beginning and ending. Well, we just talked about the first way that we're going to know, because we know they're selling high and buying low. So this is selling high, buying low. This is, again, buying low, selling high. Selling high, buying low. This represents buying. This represents buying. You know, so they're selling high and buying low. That's part of a cycle, and you can tell it with the price cycle bars. But let's tell it through the other indicators, because they don't always, a cycle doesn't always stop and start at the same place. So you need to know when these things are occurring to know whether you should stay in or get out, or to interpret correctly, especially single bars like this. Now, just staying on the upper half of the chart here just for a second, we'll let you know that this VWAP line could be either gray or it can be yellow. If it's gray, it's in a downtrend. If it's yellow, it's in an uptrend. And the way that you read this line, the process trading VWAP line, as a VWAP, is that if it's gray, it's in a downtrend. If it's red, that downtrend is extended. And if it's white, that downtrend is overextended. On the yellow side, you have an uptrend signaled by the VWAP, and if the line is green, that means that price is extended, and we don't have any portion of it here, but if there's a blue segment within the yellow line, that means it's overextended. So at this point right here, at this price cycle bar here, not only are we coming down to the contrarian line, but we see that the down move is overextended right here, which gives us another clue that that is the buying taking place at the bottom of that down portion of the cycle. As well, you will see this is the customary configuration where after that buying takes place, you'll have a bar going in the opposite direction, and then the next two bars you'll have to have a timing alert dot, and the low of this bar right here with the timing alert dot is higher than the low of the previous bar. So you see that here. Here's another timing alert dot. Here was your signal. You're down by the contrarian trade. Now you didn't have any over extended line right here, but you knew relative to the position with in the contrarian band, and then you had the classical setup here, and you have the classical response. So this is buying over here, climax buying. This is taking it to the top. We have a price timing alert bar that tells you that's when it's happening. The low of this bar is higher than the low of this bar, so that's classical. And then you just reverse it on the top side. The high of this bar has to be lower than the high of the previous bar. So that's another little bit about interpreting the indicators up here. And that's the beauty of these being non-correlated indicators, that they're giving you different information, but when they all occur at the same time, it tells you when things are happening. So the next thing is, let's look at this indicator right here, which is the internal energy indicator. It is it's called the Intergy, and it stands for internal energy. And the internal energy, when the bars are green, that is demand, and when the bars are red, that is supply, and when their bars are gray, that is weakness. Now, for instance, you have demand coming in here, and then demand is getting weak. That doesn't necessarily mean there's supply right there. Now, at some point, that's the way trading works, is that you'll have a trading effort by the bulls to push price up, and it'll push prices up, but it won't continue forever, and it gets weak and it gets exhausted, and then it comes back down. Now, in this case, supply did come in, but not necessarily does supply has to come in. This could just be a weakness in demand until the next round of demand comes in, and then push it higher. And you'll often find that in trend, where you'll have demand, and then demand will fall off. You'll have no weakness, and then more demand. Demand will fall off, no weakness, and then demand. So you'll have that in a trend both ways. But let's look at this internal energy. This internal energy is a proxy for volume. Now, they can tell you about high spike bars and low volume bars and stuff, but they don't track along with the cycles. This internal energy is the energy behind volume, so it's a proxy for volume, but it tells you about the cycles. So let's see what a cycle would look like. This time we're going to look at it from the supply side. So we'll just say here's our price bar. So we'll just say it started over here. Here it goes here, and there's your cycle. In other words, this here's our demarcation line right here. Here's the cycle. That's the complete cycle. Now, that cycle could be a lot different in a different duration than, let's say, this cycle. As a matter of fact, let's look at the up cycle right now. And that is going to be like, it'll start right here. Here's your up cycle. It starts here, goes down here, and that's a cycle. It goes from there back down to there. That's where price started to move up. It moved up like right in this area here. You can see this was buying. Remember we said that it's buying? That's because this cycle is not over. This is still part of that cycle. Okay, this cycle didn't end until this bar over here, and you can see it right here. That's where it started to go down. And so this is the beginning of the upcycle. There is a complete cycle, and now another upcycle starts. So that is how you use the, let me get rid of those. That is how you use internal energy to understand the price cycle, because it shows a different aspect of the energy behind the trading, both of the demand side and the supply side. Now, these indicators are significant in and of themselves, And this indicator, the internal energy, you also want to read the depth of the bars, because really what it's saying is here you have supply, here you have no supply. Here you have demand, here you have no demand. So this zero line is the no demand, no supply line, and it just cycles around that, just like price cycles around the VWAP, but it tells you different information. In other words, when we came in here, we knew that these price cycle bars were coming down, and now because of our understanding of how to read the indicators, we know this is buying, but we also knew that buying would probably occur because of the proximity to the contraband, and also here's supply, and weakness starts to come into supply. Over here, weakness comes into supply again, and we get a trend dot here. And that's that little trend here and up to here. Okay, so this is how you use the energy as it relates to the price cycles, so that down here you might get flushed out and say, well, or you might even go the wrong way, saying, oh, this represents a heavy selling and it's going to go down. Well, your price cycle bars don't tell you that. The contrarian position doesn't tell you that. The way the trade management works within the next two bars doesn't tell you that. And the price cycle not being over it to the upside doesn't tell you that. So this is a time where now when everything, because if you have your normal indicators, your moving averages, et cetera, they're going to be all pointing down because it looks like a price is going down. But because of this, oh no, that is buying. That is not selling there. And being able to read the energy behind the volume, which drives price, helps you establish yourself on the right side of the trade. So now let's look at a price cycle from the oscillator down here. This is a sentiment oscillator, and this is a short-term trend oscillator. Now remember, in the very beginning we went over, well, what is oscillation? It's measuring amplitude from high to low, etc. Well, both of these are oscillators, but they work in different ways. This is a sentiment oscillator, which actually measures conviction and momentum to the trade. Or you can say it measures the sentiment, which is this yellow dashed line here, and it measures the impulse of the trade, which is this tricolored line here being oversold and overbought here. Well, let's see how this sentiment line works in with our price cycles. And as a matter of fact, let me put that on because, again, you need to be able to interpret all these to do it correctly. So we showed that this was our down cycle. It started here and ended here. But let's look at the same cycle, and we're looking at, the cycle, this cycle right here. So let's look at the same cycle from the sentiment oscillator, or the conviction of the trading community, how that looks. Well, when you have the sentiment oscillator, anytime the sentiment oscillator, the momentum line cuts through the sentiment line, that is a clear indication the price is heading in that direction, as well as the slope. You can see the slope of the sentiment line here and the slope of the momentum line here. So it's cutting through right here, and let's just mark that. So that's the beginning of our cycle. you can see how that's a little bit different than the beginning of that cycle, and we'll relate it to the price bar cycle up here. But now what we have to do, so this is in a down cycle. It comes down just like this one does, and it comes down and it comes up, and now prices, the momentum line is cutting through the sentiment line to the upside, so likelihood that price is going to go up. Price does go up, but you can see from the position of the sentiment line, it's still coming down, and it's still in the lower half of the oscillator. This is the upper bound, lower bound, and this is the mid bound. So it's in the lower half of the oscillator. And you can see it only moved up to the resistance line, was oversold at resistance, and couldn't go above it. So then it comes back down through it here. And again, we're trying to find, well, where is our cycle at? So this goes back up through the momentum line, cuts back up through the sentiment line until this point over here where it cuts down through the momentum line, cuts down through the upper bound, and it cuts down through the sentiment line right at this point. Well, you can see this is selling high, and over here, this was buying low. And you can see that selling high right here with our price cycle bars. And this also, this represented buying here. Now, on this cycle, it represented buying because the buying wasn't over. The energy in the buying was not over. You can see that cycle didn't happen. But on the sentiment oscillator, we can see that this is a low. The momentum took price all the way down to the lower bound. So this is buying at the bottom. These price cycle bars right here represent climax buying. These represent climax selling. And so you see here then is our cycle on the sentiment oscillator. Let me take that off, a little bit messy. So that is much different. That's a different cycle than the energy is showing us. But they both help us here because this shows it at a low. So we're able to interpret that both ways. We're able to interpret that as it's not supply coming in because we don't see any red bars, but it is at the low and it's hitting the bottom and coming up. And that's what we would expect. If that's buying at the bottom, then we have selling at the top. So there's the price cycle for the energy. Here is the price cycle for the conviction or the sentiment and the impulse to manipulate price. Okay, so that's what the price cycle looks like on those. Now the last thing I'm going to show you here is the price cycle, and this is the short-term trend oscillator here. And it is, again, an oscillator, and so it measures cycles. And you can see there's an upper bound, there's a lower bound, and this midline is not a mid-bound. This is what is called the pullback line. And we can see that right here. Price goes up to it, it pulls back up to it, and then it continues to descend. And when it cuts through the pullback line, that's another indication. But another thing you want to see is the upper bound, the pullback line, and the lower bound are not static. In the sentiment oscillator, they're always at the same place, so we get oversold and overbought conditions. in the sentiment or in the short-term trend oscillator, one of the things we're measuring is volatility. So we want to know, the volatility will help us know what is happening with the volume and the range of that volume. And so we'll know the likelihood of the strength behind the cycle. So here we look at the cycle in the short-term trend. Now we see the short-term trend over in this area here started cutting down through the lower bound, but we'll just go ahead and say that that short-term trend cycle started right there when it crossed through the pullback line. Okay, so it's a little different than the energy. It's a little different than the sentiment oscillator, and it shows its own information. That's why these are non-correlated. But when they all start telling you the same thing, then you can have more confidence in it. So here is the cycle going down. It goes below the upper bound, and it comes down, and then there's a short period here where it went up above the upper bound and came right back down and crossed back down through. So it crossed down through the pullback line here, and then it crossed back down through the pullback line here. Now, remember, these are showing this cycle here. This is a down cycle because we're starting on the down and we're coming back to a down. So these all show the down cycle to it. And what we're interested in is, do they help confirm our price cycle bars and our interpretation that this is in fact climax selling here? This is selling at the high. So we see that. We see weakness here. We see this very important sentiment oscillator where momentum's cutting back down through the sentiment line. And then sure enough, over here at the same place, we see that the short-term trend, even though it turned green for a short period of time, it starting to slope down, and now it has cut through the pullback line. And so that is the cycle. So you can see how that cycle looks as it compared to this cycle. And then this trending cycle is a much longer one. And you can see that trend right there. That's a longer cycle, and it comes right there. So, but the point of it is that price moves in cycles, and we have to identify just a couple simple things. When is it at a low? When are they buying low and selling high? And when is that in a trend? Or when is it in a reversion to the mean? Or when is it right at support and resistance? Now, if it's at support and resistance, like up here, we have a specific trade management technique that you should employ for successful trading over on processtrading.com. You have a specific trade management technique for trend trading, for contrarian trading, and these indicators down here are all for discretionary trading because you're actually using your discretion to see these cycles. Now, usually what you're doing is you're looking at the price cycle bars and the other indicators on the top half and getting confirmation and validation from the discretionary indicators. But when you take a discretionary trade, it's going to work just the opposite. You're going to be looking down here at your discretionary indicators to tell you what is happening and when it's happening. And then you're going to be looking up at your price bars and your other indicators within the upper half of the pane for confirmation and validation. So let me take these cycles off. Oops. Let me take these cycles off so we don't clutter this up. So that was the down cycle. And remember, if you were doing the up cycle, where would that start and how would that look? Well, you'd start it right here. You go up here. Here it is. And then it would go here. And it would come up to here. Kind of messy, but again, it goes up to there. And that's a cycle. It starts the up cycle here, right here. You continue in the up cycle. You know, here's selling at the high. The cycle goes down. It goes into supply. So chances are we're not in a trend, and we're not. It goes down into supply, and then it comes back up to here, where then again you're at the end of the cycle and another up cycle begins. This is what helped you to not get confused or flushed out or wrong-footed by any of these bars, so that we know what the cycle looks like. And you wouldn't just use this cycle, you would use this cycle as well. So let's see how that looked. So on the cinnamon oscillator, your cycle started over here. And it goes over to here, down like this, and then right here. So you have it cutting up, the momentum line cutting up through the cinnamon oscillator here, and you have it cutting up through the cinnamon oscillator here. Now, it is true, you did have it cutting through the cinnamon oscillator here, but we were in that uptrend. That's all part of this. This is all part of this. This is the cycle right here, where now it cuts back down through, and it's coming up here. But we weren't necessarily fooled by this, because the Entergy didn't show us that there was one little demand bar there, nothing much, and so we knew the cycle was continuing until it got over to here when this cut up through. If this had been the end of the cycle, you would have seen this configuration, because remember from way back in the beginning here, that is how trading takes place. The buyers come in and they push it up until they get weak, and there's weakness in it until there's no demand, or the opposite on the selling side. So I hope that helps, and if you want to know more about these trades and everything, you can go over to processtrading.com to look up the indicators, and if you find this informational, then you can subscribe, and I put out a daily video as well on what the Emini did every day. So hope that helps. Hope your trading goes well, and don't get fooled. Follow the price cycles. Buy low, sell high.